I'm Joanne Barefoot. I'm CEO and co-founder of AIR, the Alliance for Innovative Regulation, which is a nonprofit working to make financial services more fair and inclusive and resilient by helping regulators modernize their technology. And I'm really thrilled that my fireside chat guest today is Delicia Hand, who is the head of consumer financial fairness
yes.
at Consumer Reports. I will just mention, we just recorded a podcast show, which is a longer version of this same conversation at my podcast, Barefoot Innovation. And those of you who'd like to learn more can come there and get more background and in-depth discussion of the one that we're going to do now in 20 minutes. So Delicia, without further ado, you came to the Consumer Reports from the CFPB. You've spent a long, long time trying to figure out how we can do better at protecting consumers. So tell us about your initiative at Consumer Reports.
Sure. So at Consumer Reports, we are evolving what CR, as we say, is known for, testing and rating products, evolving that model into financial services. So instead of, or in addition to being able to see ratings and results of testing on washing machines, computers, you can now see testing and rating results on digital finance products. So we've started that in the peer-to-peer payment space. Our next release in a couple of weeks' time will be the results of testing on buy now, pay later apps. We're in the middle of testing banking apps, and we'll be continuing to examine the space and put out the results of that work.
So the concept, as I understand it, is that you're going to address what we could think of as market failures or market asymmetry in financial services, because as a practical matter, the seller almost always knows more than the buyer does about the complexities of the product and how it may or may not work well for them. What's the big vision of what you'll end up with out of this? How are you going to empower consumers, and in that process potentially really incent the market, the private sector, to make sure they're doing the best thing for the consumer because that will help them compete?
Sure, great question. So one of the things that we're hoping to do is, I often say, we want to be able to demonstrate whether fintech is living up to its promise. There are many amazing things that we're now able to do as a result of fintech innovation. But what's really manifesting into concrete positive outcomes for consumers. So in terms of what we're trying to do, one is to actually provide some agency in the consumer experience. Financial services is a place where consumers don't necessarily have a choice. They go to any retailer, online or in person. They'll pay in the form of payments requested to the extent that they have the ability to. There's not really a choice architecture that exists in an independent way and in a means-tested way. So that's some of what we are aiming to do, is to insert some of that into the everyday products that consumers are using. And in so doing, by rating specifically according to certain elements, so not just what you might normally see in terms of fees and costs, but can consumers use these products safely, privately? Is there meaningful transparency in the engagement with the companies? What happens to their financial well-being as a result? What companies have more inclusive practices, so on and so forth. So as a result, we hope that the consumer actually has some data points that facilitates more meaningful choice. Additionally, we also hope that this improves practices. So our primary target, if you like, and it's not really a target per se, but our primary customer, in addition to the consumer, is the evaluated companies themselves. After we examine the products, we meet with the companies, and then we share the data, and we engage in an exchange where we ask them to improve certain things. So I would say that is our primary theory of change or outcome that we desire to see, which is consumers have better opportunity to choose. And as a result of the data sharing and the engagement with the companies, products get better.
So when we think of consumer reports, we picture teams of your folks who are going in the store and buying packaged food or
Yes.
laundry detergent or an appliance. Talk a little bit more about how you're going about this really unique testing, which has to include, to some extent, thinking about what does that individual consumer need vis-a-vis another person possibly would have different needs.
Sure. So we've done a wide range of landscaping of, and also surveying and engagement of consumers to ensure that we're focused in product areas or market areas that consumers are utilizing and have interest. So we have assessed consumer need and wants first, and then layered on top of that, we've also assessed the rich amount of data around standards and best practices, and also legal requirements, right? So we're looking at the baseline floor, but then we are trying to set some ceilings in terms of principles that should govern financial services. So we've looked at global standard-setting bodies, industry bodies, and come upon a set of normative principles against which we've developed a framework for evaluation. So we have principles that tether to regulatory principles, privacy, safety, and transparency. And then we have outcomes-based principles, which is really about what happens as a result, or how has the consumer engagement with that product impacted certain things like their financial well-being, user centricity, inclusivity, accessibility, among other things. And so we've developed this framework, which is connected to a set of specific criteria, and then specific indicators, so actions or behaviors that we want to see or we would examine for in products. And then we run via various methodologies, tests, or we also conduct consumer research in order to get the data to see, well, what's happening when you use a product. So instead of going into a store and buying something and testing it, we're downloading. We are also running various software packages to see what happens to consumer data. We're doing a combination of qualitative and quantitative research and product testing, which involves direct engagement with consumers. We're doing consumer research, surveys, focus groups where we lead consumers through a set of actions and observe them using a product. And then additionally, we have testers that engage with the various apps and conduct certain procedures in the apps themselves. And so that's how we test these products.
I know you've tried to start with widely used consumer services. And I know you've got some results already.
Yep.
So talk to us a little bit about what you've been finding, and including what has been surprising to you.
Sure. On the positive side, we are seeing where there are some companies that have really, I would say, lean into the opportunity of fintech, i.e. gamification, inclusive design, or other features where they are using pop-up screens and other kinds of interactive features to really put the consumer on a journey and have them engage with their own information, what happens to their information, with whom is it shared, sold, et cetera. And then in terms of needing improvement along those same metrics, we're seeing where, we're really seeing where there's a gap between the regulatory requirements. So notice and disclosure, companies are still delivering important information, but in largely inaccessible and not transparently. They're not meaningful, but these are the legal requirements, right? Consumers need to be delivered certain information at certain intervals. But is a consumer really aware of these things? And we're finding largely not, and sometimes they walk away with the wrong impression in terms of who's in charge, who's accountable, and how the product actually works. So we see lots of opportunity for improvement in terms of how companies are meeting their legal obligations in an app setting. And our conclusion is that there's opportunity to really lean into the facilities, the technological facilities that are apparent. And one of the great things about then being in an organization that compares and rates, we can see along a spectrum of providers who's doing what, and then engaging in these conversations, encourage companies to do what their competitors are doing in order to deliver the best product and services to consumers. We're also seeing more recently some interesting things, especially in the combination of actors that are in the fintech space. So think about the super app environment, an app within an app, your smartphone, where in order to let's just take a payment app, for example, that has to comply with Android or iOS, Apple rules to exist. So you've got the mobile provider. You also have the bank that is also party to the fintech transaction. And then you have the fintech company. And they each bear certain responsibilities with respect to utilization of consumer data and security. And we're seeing where there may be some gaps. There may be some assumptions made on the part of the mobile service provider. Oh, well, the bank and the fintech companies, they've got this fraud thing. Or, the fintech companies thinking the bank has it. And so it's really shining a light on where in the banking as a service environment that there's some real opportunities for there to be more alignment in terms of the multiple parties that are involved in a basic app-based financial transaction or service.
I find that so fascinating because as a former bank regulator myself, I know the basic concept is that the regulator holds the bank responsible for its third-party relationships. But as you say, this is a fast-changing space, and there's been a lot of potential, I guess, for maybe outstripping the regulatory framework in its traditional way.
Yeah, absolutely. I mean, both the impetus for this work has been, I spent 10 years at the CFPB prior to the work that I'm doing now at the CFPB, and really left with a sense of, opportunity to do more, and seeing some of the places where maybe as a regulator you had certain limitations. But now in another way, diving into and running tests on these applications, you can see potentially the limitations of a regulatory apparatus that is continually out of date because innovation happens at such a rapid pace. And you really see that. One concrete example has to do with privacy. So looking at various apps and what I now am referring to as the California exemption, right? Looking at a variety of apps, you almost always see that if you're a California resident, you will have more information and more opportunity to actually see your data, access your data, correct it, control it, delete it, all of these things. Well, what happens to the rest of the country? And how does that make sense in a borderless 24/7 environment where money is moving, initiated at the click of a button on a mobile phone. Just doesn't make sense that I'm based in California, somewhere else is based in another state, and they have more facility and agency around their information. So seeing where that misalignment really shows up in the consumer experience.
And you are evaluating, as I understand it, how the entity uses your data, what
Yes.
data they collect, what they do with it, and so on. Talk a little bit about that.
Sure. So privacy is one of the principles where we have, and please check out our framework. A regulator hat is hard to take off. So we've published the framework and would like feedback and comments on this in terms of the criteria that we're examining and the tests that we're running and all of that. And so as part of privacy, one of the things that we're examining is, well, what happens to consumer data? What data is collected when a consumer downloads a financial services app, so a P2P app or buy now, pay later app, and who is party to the consumer's journey by way of access to their information. Is a consumer going to receive marketing as a result? Has there been actual consent or engagement with the consumer around what happens to their data? Is it obvious to the consumer that they have any ability to shut off or permission data based on various app settings? So some of it is very technical in terms of just logistically orienting within a app and opportunities for companies to make things a little bit more obvious and a little bit more actionable. And then as a policy perspective, what information should be shared? How should consumers be engaged with? Should the default be a data minimization approach where the default is consumers share nothing, and then they decide, well, in exchange for discounts, rewards, or other benefits, I will permission my data. And then what are the design facilities that make that possible? How does this show up in an app? So those are all the things that we examine.
I think a lot of us have felt that we've had a half century of consumer protection active work in financial services, which has mostly been built on a disclosure model.
Yes.
The theory has been if you require mandatory disclosures that can compare apples to apples, and if you educate people on finance, which is hard to do enough, that then the consumer can make a good choice. And we know that it really doesn't work very well. We know people don't read them, and if they do read them, they often don't get the benefit that we would hope. So you're trying to put forward really a market-driven motive, again, for the provider to want to be sure there aren't hidden terms and there aren't what Elizabeth Warren used to call tricks and traps in these products. In your wildest, best case imagination and vision, what might the world look like in 5 years or something like that if you really succeed in making these tools very widely used?
Great question. If we succeed in 5 years' time in the same way that consumers can't drive a car off of a parking lot without some surety that the car has been stress tested, the same circumstances will exist for digital finance products. In other words, who is stress testing these various apps, and then how is that information being translated and transmitted to consumers so they actually have meaningful choice? I think the other way that we envision that this begins to show up is that we are also leveraging the capabilities of AI to help drive information provision to consumers and also integrate the results of these tests into the consumer experience. Imagine if when you go to any shopping cart and you're presented with the array of choices for payment, credit, buy now, pay later, whatever option is in your digital wallet, you got some ping or notification saying, well, actually, you're about to click on this payment option, but this other option over here is better according to your financial goals. For me, this is the ideal outcome. And not as a wish, but this is the expectation. In a world where we have so many different financial services providers, this is now the expectation that consumers have. What is my money going to do for me, and what are financial services going to do to help me achieve those specific outcomes?
So there's more information at Consumer Reports. You've really just gotten started.
Yeah.
Again, the podcast show is Barefoot Innovation if people want to hear more from Delicia. And just please join me in thanking Delicia Hand.
Thank you.